go straight to our first management on the show. We have the Karur Vysya Bank. The bank reported a solid third quarter result marked by strong rise in net profit and improvement in some asset quality as well. We're joined by Mr. B Ramesh Babu, the MD and CEO of Karur Vysya Bank. Hi, Mr. Babu. Good morning, and always good to see you in. Well, your gross NPAs is, the ratio is the lowest in the banking sector itself. Give us some clarity. Did you sell any NPA to an ARC? And will we continue to see asset quality improvement from here on as well?
Yeah. Good morning to both of you. Now, first of all, thank you very much for the opportunity. Regarding the gross NPA, I can just clarify saying that for the last 4 years, we didn't sell any of our asset to any ARC. So everything has been done internally. What we did is we formed a collection team internally in the bank, and we understood these are the issues which can come up and all. So there we started focusing on our SMA 1 and 2 starting, and later we moved to SMA 0. So that way, if you can find, our SMA 30 plus for the whole portfolio is 0.38%. So that is the reason we ensured saying that the slippages have to come down. Secondly, we started working very seriously on the recovery front also. We formed the legal team, we have strengthened it, and disposal teams also we have formed. With all these things, the recovery started. You can find that write-off recovery also, it has come out so well. All these have supported us in bringing down the gross NPA to 0.83.
That's incredible. You know, Mr. Babu, you had earlier said that gross NPAs won't cross that 1% mark. Not only they have not crossed that 1% mark, they're stabilizing around that 8.3% mark, 0.83% mark as well. So what we're trying to understand from you is what is the kind of further improvement that we can see from here on? Is there room for that, or do you think it's around stable levels right now? That's as far as the asset quality is concerned. And on the loan growth as well, you had guided for over 15%. Do you maintain that, and what's your prognosis for the next year?
Absolutely. Now, asset quality is concerned, more or less we can maintain at these levels, if at all, because our efforts will continue to further actually accelerate the process, and in the process we will be able to do something more better. But otherwise we can treat in the new normal. This is the way normal we can think of. Coming to the credit growth also, if you can look at divide the entire issue into two parts. Our focus for the last 1.5 years, we have shifted on the RAM vertical, because there its majority is collateralized and the yields are also pretty good for us. That is the reason, if you can see our presentation, it has grown by 20%. And whereas the corporate, consciously we have brought it down because the yields are low there. When the liability side, we have some sort of a stress, particularly on the CASA, the cost of deposits have gone up. We need to make it up overall on the profitability front. That is the reason we focused on RAM. So I'm not saying that 20% growth will come up here and there and all, but maybe I can think 16 to 17% we can think of under the RAM segment. Overall, we can think around 14% for the assets growth. That's what we can think, even after the shortfall in the corporate.
All right, so RAM you're saying will grow 16 to 17% and overall will be growing at 14%. Corporate, which at one point was over 40% of your book, you've brought it down to sub 20% as well. That's your target.
16, so 16 now, 16%.
16%. So from here on, what is your prognosis on the corporate front as well? I mean, at some point you will have to, start giving loans there as well. It will bottom out, right? So what will the product mix and then steady state loan growth look like?
Mangalam, the logic is very simple. When the money is there, just like a businessman, if you think, so where we can get the maximum yield and the risk-wise lower, naturally we will try to put the money there. Currently, there are other opportunities available on the RAM sector. As and when we find some sort of a freedom as far as the liabilities are concerned, and the CASA also position improves. So we will go back to corporate. It will be around 20-25%. That way we can take it forward. But it's a tactical decision taken for the time being to continue with the RAM.
Right, Mr. Babu, what about NIMs? I remember you had told us that worst case scenario, it will go down to around 3.8% or thereabouts. Do you think the risk is on the downside, or do you think it will hold at current 4% odd?
No, I'll tell you, because it's a one-way traffic now. Yields cannot go up from here because above all, RBI may cut the rates also. So that way that is blunted. And second side, deposits cost is there. Every time it has been going up because the repricing is happening when the renewals are there. Automatically it will go up. So that way, if there is a rate cut, we can think of around 3.85 to 3.9, we can think of the NIM. Suppose if the rate cut is not there, it can be around 3.95, that's what we can think of.
All right, so 3.8 to 3.9 if there is a cut.
3.85.
3.8 to 3.85, very specific there.
If the rate cut is there, if rate cut is there.
If the rate cut is there. And final question then, when it comes to deposits and fundraising, what's your strategy on increasing your deposits from here on? And do you have any fundraising plans in the near future?
Fundraising as it is, we don't require because we have sufficiently capitalized. So that way the earnings, what all we have, if we plow it back, that will be quite sufficient to take care of our growth, because you would have seen our risk-weighted assets is also around 56%. Even if it goes to 60, 65 also, so we will be well within this CRAR, and that's why there is no need. Now coming to the deposits is concerned, we have taken many measures within the bank. We have formed the sales vertical. So under the different types of sub-verticals we have started there and all, focusing on the institutions, NRI and corporate salary. That way we have started working. Around 1,200 people we have taken from the market to take care of this for the acquisition. And likewise for the deepening also, we have taken the resources within the branches, around another 1,500 people we have taken. These people, they will be engaging with the customers for the retention, because both acquisition as well as retention, both are important to fill the hole. So that is the reason we are actively working on the deposits, because there's the resources which we need to deploy for the assets. So we are abreast of the situation.
All right, we take that point, Mr. Babu. Thank you so much for joining in. As always, it's a pleasure speaking with you. You've been candid with and forthcoming with your answers on loan growth, on asset quality, on credit costs, as well as increasing deposits as well. We wish you good luck, not just for the fourth quarter, but the remainder of the next financial year as well. A mild green tinge is what we're seeing in Karur Vysya Bank in an otherwise very red market. Let's talk about